Welcome to the Closing Beat, everybody. Happy Thursday. It is Thursday. I hope you all are doing well out there. We're doing a recorded version of the Closing Beat for just a few days while we make an adjustment to the new software that we're going to be using and the new layout for the Closing Beat. Well, I won't bore you with that, though. Let's just dive into the markets today. We're also playing a game called Guess the Dow. You can see it bottom right-hand corner of your page. Soon to be changed up just a little bit there. And our jazz artist of the week is Billie Holiday. It's been one of those weeks down here. How about you? Where at nighttime, the weather's just a tiny bit breezy and it's a little rainy. A little Billie Holiday? No? All right. Anyways, let's talk about the stock markets today. You got a down day, which if you'd have checked just 20 minutes before the markets closed, well, maybe 30 minutes before the markets closed, you would have thought, all right, another strong day, no big deal. But the Dow finished down about 0.5%. You got about 1/4% on the S&P and 0.5% on the NASDAQ overall. Let's take a look at what happened. So we take a look at the S&P here. All was pretty good, moving higher, all was fine. And then here towards the end of the day, you got this push lower, just an aggressive sell-off into the close with a small bounce before the close there. So what happened? We got a series of light volume days. You've got the markets, although it doesn't seem like that right there at the end of the day, you got a series of days here where the stock market's moving higher on very low volume. Not a lot of interest during the day. And so you have the ability, think of it as like a small boat headed into a storm. You have the ability for one rogue wave to really do some damage to the boat. So that's where we're at with the S&P. A little bit of selling today led to people going, oh no, should I get out? Should I sell? And you see the little sell-off towards the end of the day. No problem. The S&P, by the way, still was the strongest out of the group. It did finish down on the day, but it was down the least out of the group there. The one down the most today was the Russell 2000 after having a series of wonderful and strong days moving higher. Well, it pulled back a little bit extended there. You got weakness in the tech space from inside the Russell that hurt it today. In the S&P 500, what led you higher today was healthcare and utilities. Again, kind of following up to what we had yesterday, the defensive areas of the market are now starting to hold support and push us higher. Not so much the tech stocks, the big cap growth stocks. I maintain that's a good thing. But anyways, you got the Dow headed higher as well, but it finished lower on the day as we got into the end of the day. One of the things that dragged on the day, let's take a look. You got Disney in the Dow. That was one of your stocks that dragged down about 4% on the day overall. It was downgraded at Imperial. They downgraded the stock all the way. Basically, the analyst said the stock has moved too far too fast, and it's moved as far as it has because on the excitement of the parks reopening. Now that we know the parks will reopen, the excitement is starting to wane a little bit, and focus turns back to the company as a whole. So they said basically the stock has gone too far too fast, up 25% just since the beginning of April, and they said the stock needs to pull back there. Their words, not mine. But anyways, that's what you have in the Dow. Same thing over there with the light volume. You got a lot of days here where, now granted, we're going into summertime, and I understand that, but you've got a lot of light volume days moving higher. You don't like to see higher days on lower volume. You want to see higher days on higher volume. Lets you know there's a lot of meat on the bone for people that want to buy. So that's what you have overall. We had jobless claims that came out today. Not good. Jobless claims were up 2.12% overall. 2.12 million. Overall, which is a little bit higher than was expected, but still in this downward slope. That's the exciting thing. Everybody's kind of saying, all right, look, we've seen extremes here. Look back just a year on this, an amazing historic rally or bounce in the number of unemployed, but the trend is headed back towards normal, and that's what everybody thinks. If you haven't seen this, by the way, I'll go back as far as I can, all the way to the 60s here, just to give you an idea of how nasty this really is. We've never seen numbers anywhere near this. This is, look at how back in the day here, 671,000 in the mid 80s there. That was a big deal. Through the financial chaos there, we had 629,000. Oh my gosh, that's nasty. Nope, we blew that out of the water here, so rather nasty. But it didn't seem to care. The markets didn't care. They were moving higher most of the day. Again, light volume, that was the concern overall. The China drama continues as China voted to sort of tighten down on Hong Kong a little bit with what they've done. It's a whole thing. If you want to read it, you can. The U.S. is upset by that. The U.S. obviously has got a little bit of drama going back and forth with them in terms of what they're going to do. And the only place that seemed to care was gold. Gold was up a little bit today, finished up the day about $1.50, $17.28 an ounce. But other than that, nothing else cared. There was just no weakness to speak of anywhere else. In fact, we had the opposite of yesterday. So yesterday we talked about the S&P 500 that the strength came from the previous weak stocks and the weakness came from the previous strong stocks, and I went through all of those to explain it. Well, we'll look at the same today. It's almost exactly the same. The weakness in the S&P came from the weak stocks already. So you've got the S&P 500. I'll cover this real quick. You got the S&P 500 with obviously a recovery attempt there, everything trying to get back to normal, and you have a handful of stocks that have been weak, have not tried to recover. Well, the weakness came from those today. So you got Hewlett-Packard. Actually, that CEO said the stock is undervalued. They're going to start buying back shares. You got Hanes Brands, Kohl's, retailers, all these second-tier retailers, the Gap, Tapestry. You got Norwegian Cruise Lines profit-taking there. Airlines, that's good news with the airlines and how they're going to kind of get things back on track or resize the company, American and Delta anyways. And those stocks sold off on the day. Nordstrom, Carnival Cruise, all of these stocks that had previously, over the past 2 days, been the strength, today they became the weakness. If we flip the script and we look at the top gaining stocks on the day, you've got the top gainers, Dollar Tree. That stands out. They're not all perfect here, but that stands out. Some of the biotech stocks, Regeneron Pharmaceuticals, already strong moving into it. Norton LifeLock, already strong for what in the midterm. The strength was already good. And we can go through the list here, Lincare, things like that. Though that's where you saw the strength. People a little bit concerned today said, I'll be defensive and I'll go trade the stocks that are already strong, showing some kind of a recovery with the market, is what I was trying to say there. Good. All right, so that's that part there. On our FinTips video yesterday, we did the Russell 2000 data to cover the volatility and the actual returns and stuff like that. Good stuff there. Tomorrow will be Roth conversions and some tax arbitrage you might consider in this year if you're considering that. So you may want to take a look at our FinTips videos. And then on the Dow Show today, it was Technical Thursday, and Cody actually did a really cool study on a strategy that we played with a long time ago and I shared with our customers. What if you had to do two trades every day? What if you had to buy the open and sell the close? So you bought it the morning, you sold in the afternoon, in the evening when the market's closed. Would that be better, or would you be better off buying the close and selling the next morning? So we kind of went through that and talked about, he pulled up the data and everything. So that looks pretty cool there. And I covered moving averages, just admittedly, I wasn't really prepared. So there you go. That's on our Dow Show. Anyways, let's go through the sector breakdown here today. Defensive areas rallied. Utilities got higher on the day. This is that breakout from the downtrend we talked about the other day. It wouldn't get waking up until it broke through that black line that you see there. It is now broken through the black line. Looking good. You can see the volume and all the excitement as we talked about that would happen there on that one. Headed back to the 200-day moving average, it looks like. Tech stocks, weak on the day. A little bit of a rally to start the day. They benefited from Apple. Apple got a bit of a turnaround today. JP Morgan upgraded him to 365 as a price target from like 350 or something, I forget. But that started the day. However, tech stocks just couldn't get it going on the day. No problem. Healthcare was one of the leaders today. At one point, it was best performing sector in the market, moving back towards these highs here. So is that waking up and going to set up for a new breakout here? I'm not sure. Right now, it just remains choppy. But healthcare stands out as one of the big leaders today. Names like Johnson & Johnson had a good day, 1.5% on the day. United Healthcare did float back, but throughout the day, it broke out to new 52-week highs. Market weakness at the end of the day pulled everything back a little bit. So I give that one just a little bit of credit, but it did pull back. And then Merck had a good day as well, up about 2%, although it was better throughout the day. All right, materials, there you go. Back to the 200-day moving average. That's the latest sector to be messing with the 200-day moving average. A couple names in the space. I already pointed out one, Lincare. I used to call it Lincare. Lind, one of the biggest contributors to the materials today with its gain above the 200-day moving average there. And then you've got Air Products. I don't know, it's kind of sloppy. Maybe a breakout here of this little range. I don't know. The risk reward's kind of there, but it's just, I don't know. It's just a sloppy one. I thought I'd point that one out. That's basic materials. If we take a look at the financials there, financials taking a break, down 1.5% on the day. Look, they gained over 10% in 2 days. It's still up 9%, right? I was still up 8% over this week alone. So financials taking a little bit of a break there. That's okay. Your top 5 positions in the XLF all week today. Bank of America was weak. Berkshire Hathaway was weak as well. Not as bad, though. Down about 1/3%. But anyways, Bank of America, you got JP Morgan in the mix, Citigroup, Wells Fargo, just all took the day off, right, from being really impressively higher throughout the week there. And then lastly, we'll go to energy. Energy pulled back 2.8%. That's largely going to be weakness from Chevron, down 3.33%, and ExxonMobil, down 2.6% there. You look at the price of oil, it did finish positive on the day, kind of remains in this little range. It's like it refuses to pull back, refuses to go higher, and so not really much to say there. Oil inventories came out an increase of about 8 million barrels, whereas we were expecting a drawdown. And so not really a reason for oil to move higher today, but nonetheless, it actually did move higher. All right, let's go to your technical breakdown here. 18 new highs on the day. A couple names that stick out. EA, Electronic Arts, EA Sports, hit new 52-week highs. Great reversal yesterday. That one looks like it's got the momentum on its side here in the short term. Popular REIT, Crown Castle, made new 52-week highs as well. Just kind of rocket shipped here in the last couple days. Interest rate sensitive there. There you go. Cadence Design hitting new 52-week highs. Tough pattern to participate on if you're looking at that one. A lot of the stocks did reverse the afternoon sort of sell-off. So like Home Depot hit new 52-week highs, joining Lowe's, by the way. Lowe's beat it to the punch. But Home Depot started to pull back on the day. Lowe's did hit new 52-week highs, but it pulled back as well. Dollar General is going to be earnings related. That one pulled back as well in the afternoon. A lot of the 52-week highs did that, but there were only 18 of them. 0 new 52-week lows, so that's good. Looking at some technical patterns there. Limited brands. This is Victoria's Secret. We talked about this one on Tuesday. The idea of this pulling back from the 200-day moving average. It is. We can move on. That one looked pretty good. You got Regeneron Pharmaceuticals there. Just kind of a series of equal highs right around the 582.25 mark. Looks like this one's trying to break out. Good volume in there. Obviously a sector or an area that's getting a lot of attention right now. But that one looks like maybe kind of a sloppier breakout. The other one was that APD. Just kind of a sloppy breakout there. Risk to rewards there to play it back to this prior high. But I don't, it's like a last choice there. Lennar, it did sell off towards the end of the day there. I was going to suggest this earlier today. I was thinking, all right, maybe this is pulling back to the 200-day. This would kind of fit into what people call a scalp trade, where you just kind of get in and out for the quick move. You don't stick around very long. But Lennar, by the end of the day, had sold off 7.3%. And there you go. They were just bled off all afternoon. For the most part, it was hanging up here when I was looking at it earlier. But that's an intraday chart to kind of show you how that one looks there. The airlines real quick. American Airlines is going to be cutting its management and admin staff by 5,000 employees. That's about 30% there, trying to resize the company. And Delta said, hey, us too. We're going to start with trying to buy out employees, just start to pay out people to maybe retire a little bit early and scale back their business a little bit. It's understandable. Autodesk. Yeah, Autodesk, by the way. So this was the trade that we did on Trading Tuesday. On the Dow Show. Went over a specific trade to go through exactly how you could play this through earnings. Earnings came out. The stock did finish in between where we were hoping for. So that trade, which resulted in a credit of just over $2.50, is now worth less than 50 cents. Would expire worthless at this point on Friday. So kind of a cool one there to show that. And then if you want to check it out, Tuesday's Dow Show, I went to the board and actually drew out exactly the trade, what it means, how it works, if you're interested in that. Just a educational tool. That's it. Boeing going to restart production 737. About time. Toll Brothers earnings back to the 200-day moving average. Looks a little bit weak there in the short term. Tempur-Pedic, by the way, said they saw an uptick in their sales overall there. Improvement in the number of orders for the Q2, by the way. And yeah, I don't know. People buying mattresses. It's kind of cool. We bought a mattress. Big Lots doing better than I would expect, but they've got earnings there coming out tomorrow. And if you like dividends, you got Lockheed Martin. Lockheed Martin, $2.40. Goldman Sachs with their ex-dividend date, $1.25. Kellogg's, you got coming out there, 57 cents. Tyson, if they're still paying the dividend, they may have cut the dividend, but 42 cents there if that's accurate. And McKesson paying out the 41 cents. You got a whole lot of shifting going on in the S&P 600 and S&P 400. So if you happen to be in that space or replicating index funds or anything like that, you've got some work to do. There are 1, 2, 3, 4, 5, 6, 7 different changes in those two indices. So a little homework. Other than that, I think I'll wrap it up there. I do appreciate you guys watching, and thanks for being patient with us while we improve everything. All right, we're making things a little bit better here. We will be back live, I'm hoping, by next week. But hopefully you learned something today. If you did, hit the subscribe button. Check us out at Jazz Wealth if you would. And appreciate it. Enjoy the rest of your day.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.